Okay, so I get asked a lot, what's it like to do research for a vehicle? So you want to check a couple different things. If you're buying a used car and you see that on the lot or you see it in somebody's internet ad, they'll typically have the VIN number of the vehicle on there. So you want to go ahead and get that, and then you can use that VIN number to check the NADA value. And it'll be very specific by the VIN number or the vehicle identification number, so you can get the accurate pricing for the car. Edmunds.com uses the VIN number. Lots of places use a VIN number that go ahead and do that. You want to check Carfax to see what's going on with that. Now that does cost you some money to do that. It's about $25 for the first report, and then if you buy a bunch of reports, you kind of get a discount on that. But Carfax doesn't give you any accident history, any repairs, any major problems with the vehicle. It's going to be listed on that Carfax, so you know exactly what you're getting, whether it was into a minor fender bender where all they had to do was some cosmetic work, or it was a major accident and a lot of work had to be done. The other thing, if you're buying from an individual, you want to check to make sure if they've got the title, you will ask for a picture of the title, because you want to make sure the title is not salvage. Salvage means that the vehicle's been in either a flood or some other type of damage, and it has a damaged engine and not necessarily covered under warranty, and a lot of people will not finance vehicles that have been salvaged. So I get asked all the time about setting prices for vehicles, making offers on vehicles, and how does that look and what does that sound like. If you're buying from a dealership, then you want to go ahead and do some research. You'll see what the invoice sticker is on there. You typically want to be in the sweet spots anywhere between $300 and $500 above the invoice price on the vehicle. The dealer does need to make a little bit of money on that, and that's kind of where the sweet spot wants to be. If you're buying from an individual, again, couple $100 above clean value of the vehicle is an okay price. Somebody who's selling a vehicle for $5,000 and it's only really worth on the NADA about $3,000, you kind of want to consider that may not be the best deal for you. You always want to get your confirmed price in writing. Go ahead and get that buyer's order in writing, know what your price is, especially at the dealership, and then you can talk about, once you've got your price set, then you can talk about, oh, okay, so let's talk about my trade. Because now I already know what my price is, now I can negotiate my trade and reduce that price a little bit more, and then that always helps with financing. But you always want to get everything in writing first. Getting in your final negotiations, and you've got your sales price, because you negotiated that first, and then you talked about your trade and reduce that sales price even a little bit more. Then there's some other things that you want to consider. If you're running close to loan to value, getting close to 100% of the value of that vehicle, you want to consider gap insurance coverage, because that's going to help protect you in case of an accident and cover that what the insurance company is going to give you in return for a vehicle that's now unfortunately maybe totaled and what you owe on that loan, and that gap policy covers that. In addition to getting gap coverage, you ought to consider additional warranties, mechanical repair coverage, or MRC as we call it in the industry. That's an extra warranty that's available to you that typically goes out longer periods of time than the manufacturer's warranty, longer than your 36,000 miles, longer than your 3-year coverage. That's a great option to get. The other thing to consider to get is credit life and credit disability insurance. Credit life insurance also covers you in case, unfortunately, you should pass away, and so that your estate doesn't have to worry about making that loan paying current or taking care of that auto. It's taken care of. Your family doesn't have to worry about that. Credit disability kicks in if you're unable to work after 14 days. It makes that payment during that time that you're not able to work. So again, that kind of keeps your credit history very good and strong during that time.